Hello and welcome to another update video about MATIC. MATIC formed, as you know if you watched my previous videos, a first 5-wave pattern to the upside from the September lows and peaked here in December, end of December. It's a 5-wave move up in a leading diagonal. Wave 1, Wave 2, Wave 3, Wave 4, Wave 5. All complete after 5 waves. We're normally watching for a deeper pullback in a Wave 2. Which is again then a 3-wave move down. That pullback happened, pretty much went into the middle of that support area, into the area between 66.7 and 73.3 cents. Ideally, this Wave 2 correction is now complete. Yeah. Why? Because, well, first of all, it formed 3 waves down. Yeah, it can always give us another move down, but ideally the correction is over, because we formed 5 waves up, right? So there's a micro 5-wave pattern to the upside that we've seen here from the 23rd of January low. And that is normally our first signal that things are changing a little bit on the chart. We've also seen something like a breakout from the corrective price channel. I don't think we have a reliable and sustained breakout yet. But it's, it's going that way. And the market is fighting and we have 5 waves up. We're currently holding above support. So ideally, that wave 2 is over. That's currently what I prefer. If there is another dip and a break below the 23rd of January low, then the next support levels that will be relevant are 66.7 cents, 64.9 and 58. So these are still bullish support levels. It would simply mean that we're falling back into wave 2. I have to say, though, it wouldn't be ideal. Yeah, it would already indicate some weakness. But for now, let's zoom in. And you can see a 5-wave move up into the 31st of January high. The market reached at the time the ideal target for such a 5-wave move. So it adds a little bit of confidence. The price also reacted here to one of our trading areas in a wave 4. So now, after these 5 waves are complete, we could see that as a smaller degree wave 1. Basically wave 1 of wave 3, of yellow wave 3. Remember, wave 2 finished here, presumably on the 23rd of January. So we're now watching for a 3rd wave to unfold to $2.12 plus. And it might be that an early first wave, a smaller degree first wave of that larger 3rd wave is already complete. Then now, obviously, also similar to the larger structure, we're watching for a 3-wave pullback into support. So what are the support levels? Let's zoom in. And here you can see the pattern. So I currently still prefer the white count, in which the market dipped in an A wave, reached our support zone for the first time, this micro support area here, between 77.6 and 71.9 cents. An A wave often reacts to the area between the 50% and the 38.2 fib level, at least an A wave of a wave 2. It did that, rallied, did not break the previous high, so I see this currently as a B wave. And now this C wave to the downside might be unfolding in the white count. So these support levels are still relevant in yellow, but I've added yesterday an additional, let's say, target area, communicated that already on Discord and Telegram to gold members. I don't think we talked about it yet in the video. This is an ideal target area for wave C, starting at the 100% extension of wave A, which is here starting at 75.4 cents, and then it ends at 71.4. So it's basically an additional target area that we can look at, watch basically, together with the larger support area. There might be a little bit of overlap, and this is an area where the C wave would ideally finish. But only in a situation where the C wave comes down lower. I prefer that at the moment, but I also added for you this more direct bullish breakout count. This move up resembles a potential 5-wave move. Okay, it's a bit difficult to see. We are on the smallest time frames. You can get a lot of distortions here, but it's a potential 5-wave move. So it's possible that this wave 2 finished already on the 1st of February. It was just a shallow wave 2, but it did the minimum because it reached our support area. So it's possible that we get a direct breakout from here and rally directly. Okay, so I overall watch a bullish scenario, a breakout scenario. It is possible that the C wave comes down a little lower. I prefer that as long as the price stays below 82.2 cents and especially below 83.3. But if we get a sustained and convincing break from here above these levels, I assume the orange count plays out and we are already in this move to the upside, yeah, in basically wave 3. So they are both part of the same scenario. They're both bullish. One allows for a direct breakout. I told you my preference. Technically speaking, it should be quite simple, basically just buying. It is at least a possible strategy. I'm not telling you to do that, but from a technical point of view, anybody who wants to trade that setup, I mean, it makes sense to just use pullbacks as opportunity when the market makes them available. And yeah, then basically enjoy the third wave rally. But please be aware that below 71.9 cents, the probability is increased that the market will fall back into the larger degree wave 2. That wouldn't be bearish. It would simply mean short-term, yes, but it would simply mean that we're extending this entire correction that started end of December. That's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.